Welcome to the Crypto Prism channel. Let's take a look at Bitcoin's latest market structure. On the 1-hour time frame, volatility intensified last night, showing a choppy shakeout pattern and forming a lower high. After pulling back from around 70,000, the rebound only reached around 68,000 without making a new high. This structure indicates significant selling pressure above and weak willingness from buyers to chase higher prices, with bullish rebound momentum continuously weakening and bears gradually taking control. If price later breaks below the previous low, forming a lower high and a lower low, it will confirm short-term weakness. In terms of volume, the rally was driven mainly by emotional buying with temporary volume expansion, but there was no sustained capital follow-through. During consolidation, volume contracted and occasional volume spikes appeared on pullbacks. Overall, upside follow-through is insufficient and volume coordination is weak. The MACD green histogram is shrinking and the two lines are converging, indicating weakening bullish momentum. If a death cross forms and breaks below the zero line, the probability of a short-term pullback will increase significantly. RSI is around 50 and has not entered the strong zone above 60, meaning the rally lacks conditions for continuation. The probability of short-term weakness is higher, likely forming another lower high and breaking support to retest the previous low. Only a high-volume breakout and firm hold above 70,000 could potentially restart the uptrend, and the current probability is very low. Overall, the structure remains choppy and weak, and before firmly reclaiming 70,000, caution is needed against a pullback to test support. From the 4-hour descending channel structure, the lower high on the 1-hour chart is echoing the medium-term bearish pressure. The key short-term focus is whether price breaks below the recent consolidation low, whether MACD forms another death cross downward, and whether RSI breaks below 50. Once confirmed, the pullback rhythm will become clearer. On the 3-day chart, price is trading between the 0.5 and 0.618 retracement levels in a deep correction consolidation zone after the main uptrend ended. In essence, this is a chip redistribution area rather than a new trend initiation zone. The core resistance at the 0.5 retracement level has shifted from a neutral dividing line to clear resistance. Price has repeatedly rebounded to this level and pulled back with obvious upper wicks and persistent selling pressure. Bulls have failed to complete structural repair, and the market remains in a weak structure. From a trend perspective, since the 126,200 high, both highs and lows have shifted downward, forming a breakdown pattern. The current consolidation is a corrective phase after the main decline, not the start of a new uptrend. Until a higher high is formed, the trend remains weak. The volume-price relationship shows heavy volume during the main decline and shrinking volume during consolidation. Rebounds lack sustained volume, declines are driven by active selling pressure, and bulls lack incremental capital. MACD remains below the zero line, with the red histogram converging but not turning green, indicating only weakening bearish momentum. A golden cross below the zero line represents a corrective move rather than a trend reversal. RSI is around 40, not in a strong zone with no clear bullish divergence or bottoming signal. In terms of the outlook, price will most likely continue to consolidate between the 0.5 and 0.618 levels, potentially testing the 0.618 support, or even breaking below it. Only a high-volume breakout and firm hold above 0.5 could open the door for a medium-term recovery, and the probability is currently very low. Overall, the correction has not ended and the trend has not reversed. Before firmly reclaiming 0.5, there remains risk of retesting 0.618 or even lower support. The current range is more like a choppy shakeout phase rather than the starting point of a new trend.